Let me bring you over to my chart that I showed at the beginning of the hour, which is this kind of risk-on mood, which people say could be complacency. What happens for this to go back to levels that we saw back in 2006, 2007?
Well, you mean in terms of more risk appetite?
It's just in terms of market sentiment, right? If you say, well, at the moment they're ignoring all the political risk, what needs to happen for the market to say, to stand up and say, actually, this could get worrying?
So I think you'd really need something that makes people reconsider fundamentally their outlook for global growth. And so far, we haven't seen anything that reaches to that level. But there were some fears around that immediately after the presidential election because of everything that's been said about global trade and about putting sanctions on China. Now, we're not there yet, but you could easily see a scenario, and we've seen this played out before, say, with Iran, where the U.S. would decide to impose sanctions on any businesses doing business with North Korea. And obviously, Chinese companies would be at the forefront of that, and that could escalate and get out of hand very quickly. Now, nobody's hoping for that, but that's the kind of signal that would make people think, oh, this smooth global growth outlook that was underpinning all our returns expectations, all of a sudden it's no longer valid, or at least it's in question, and that could trigger a spike in volatility. But apart from that, and I should say, we're not among those who think the markets are currently complacent.
Are we seeing the importance of Washington diminishing here? You mentioned the consensus here when it comes to tax reform, the BAT no longer a part of the strategy the White House and the Congress, the Republican leaders in Congress have adopted here. But what are the lessons that you've learned here after this last fight over health care in terms of what Washington is able to get done or may be able to get done? Is its role diminished somehow as a result of all of that?
No, I think the lesson learned is really keep filtering out the noise. Focus on economic fundamentals. By any standard, the U.S. economy is still doing very well, has strong momentum. The Fed is being appropriately cautious in normalizing policy, and so absent any policy stimulus, U.S. economy is doing okay. U.S. companies are healthy. So we're really looking for something that would get things out of this range bound that we're seeing the economy. And if it's not happening, we're still seeing okay outcomes. So I don't think Washington's importance has diminished. And we're still, there's still potential for both good upside and downside surprises. But it so happens that the economy is in good shape right now.